First up, we have Kevin Zhang. Kevin's been building large-scale Bitcoin mining projects all over the world since 2014, Mr. OG Miner. He joined Foundry in the summer of 2020, and he is a big part of building it to the behemoth market leader that it is today. Next up, we have Ethan Vera. Ethan is the co-founder and COO of Luxor. Mr. Darcy DeBarris, as the CFO of HIVE, Darcy has been instrumental in implementing the financial development of the first publicly traded crypto company, mining company in Canada, where they raised $200 million in equity investment, and they have operations in Sweden, in Iceland, Canada, and their financial operations are in Bermuda. And last but not least, I don't know, I feel like this man needs no introduction. Russell Can, head of mining at Core Scientific. Sorry, not last but not least, we can't forget you, also a troublemaker. Ben Miklozek. Ben is the co-founder of Locotech, and he is spearheading efforts to usher in the next era of energy-efficient Scrypt ASIC technology poised to reshape the market landscape. I'm going to scooch on over here and ask these gentlemen questions. So this panel is really... We do? Oh, I'm sorry. We have a late addition. Welcome. I'm going to ask you to introduce yourself.
I'll introduce myself. I'm Margie Feng. I'm the marketing manager from Bitmain. They added me later. It's not your fault. I'll just introduce myself.
Perfect. We're going to... There we go. All right. So the intent of this panel was to bring some of the smartest people in the world and ask them, you know, why do we mine in such challenging conditions when governments are trying to shut us down? Why is it that we do that, you know, despite all these challenges? So we're going to kick it off. You know, anyone who wants to answer any of these questions, go for it. But don't feel like you have to answer it. We have a lot of good content out there. So let's. Why do you mine? Yeah.
She said smartest, so maybe I'll pass on this one. No, I think from my perspective, one of the reasons to mine, and one of the ways you look at mining is it's a leveraged bet on Bitcoin. And when you are thinking about whether you should mine, you always consider, okay, does it make more sense to mine or just to buy Bitcoin? And I think the reasons for choosing mining is if you have a competitive edge. If you have operational excellence and you have a facility and a site and a jurisdiction where you know exactly how you should operate and how to work with the local environment. Otherwise, just buy Bitcoin. It's so much easier. Save yourselves the headache. And that's why you see some of the more successful miners are out there. They actually have years of history or legacy on their team. You have the HIVE blockchains, the Core Scientifics, et cetera, the Bitfarms. These have been team members and companies that have, I think, like 2 or 3 halvenings under their belt. And that's because they learned from past mistakes how to operate properly. And anyone new that's coming in and they tell you that they got a great site, that they have cheap power, oftentimes they find there's some roadblocks in the way that they were unforeseen. So it is really tough. I know I'm supposed to say mining's great, everyone should do mining, but it's really, really tough to break into it, especially with how challenging it is with the halving right around the corner.
Thank you.
I'll jump in there too. I think one of the things that drew me into mining initially was being at the forefront of a new industry. So when I was coming out of college and looking across the spectrum of different industries to join, many of those were what I would consider like legacy industries. They had been operating for dozens, if not hundreds of years. And so while today, you know, mining has existed for, you know, a decade and a half almost, it's still very nascent and there's still a lot of opportunity. So it is a really great industry in that you can come in, spend 1-2 years, and really get quickly up to speed and start competing with some of the other people in the industry, something that's not very possible across other kind of more traditional industries.
So along that vein then, how is building a startup in Bitcoin mining different than in other industries?
Russell's built the most companies.
So the great thing about Bitcoin mining, or any kind of mining, to take that to be specific, you can start out small and you can be successful. If I had to look at it again, I would actually say you need to either get some scale because you need to have the tech and the facilities, you need to have the software to manage large scale, or I think you can also be very successful as a small miner, as long as you pay attention to your power environment and where you're going to be. You don't have to go out there and spend $100 million buying machines. You can actually start out with a much smaller scope. So I think in Bitcoin mining, you can actually, from a business perspective, you can create a very successful business, although it has a ton of risk coming in and going out. But as far as revenue driver to employee and the number of people you need, you can actually, with a very small team, have a successful startup, and then you're able to grow that based on what you learn.
And on that co-founders piece, I think it's the most critical, especially when we're talking about startups. It's something like 65% of startups fail because of co-founder disputes. And so who you're doing business with in the beginning is the most critical piece, I think, to starting a successful mining company, making sure you have aligned vision for what you're building. Does one person think you're building a unicorn mining company and raising a bunch of capital, or does one person want to focus on cash flow and just getting the lowest OpEx possible? Making sure you're aligned philosophically too is a huge area of debate between founders. And then finally, economic incentive, making sure people are happy off the start with the equity split. Because if there is a small disagreement on that and discomfort, it'll only get bigger over time as the company scales. So making sure you find the right co-founders is critical.
Those are some, oh, sorry, go ahead.
And I think it's having real thick skin too, because this is a ridiculously, as we all know here, volatile industry. And if you're not ready to go through the ups and downs, not over years and years, but from months to months, weeks to weeks, you're not going to be able to handle it. And I think, I said to somebody one time, to be in this industry, if your emotions are going up and down based on the price of Bitcoin, it's the wrong industry for you. You got to sort of ignore that, focus on what you can control, which is your costs, the way you're managing and your relationships, and you hope the Bitcoin will take care of itself. But there's going to be times where you're probably ready to kick it in, but you've got to keep going if you believe in it, because that's what Bitcoin's there, is to secure the network, the decentralization, and that's why if you believe in that and you're in for it the long term, that's a place to be. But for a quick fix, it's not probably the best idea for a startup.
So who here has the thickest skin?
Well, I'll answer that, and I'm sure Bitman could answer that as well. It's funny when you start a company in this industry. It's quite one thing when you're doing software, which is quite easy to implement and create, and then continue to fix, or being a Bitcoin miner and just setting it up, making sure you can cool it properly and get rid of the moisture. But man, when you get into the silicon industry, you better have some grit. It's we started our process in 2019, and it's continuously hiccups that just take a long time. It's not just a quick fix, but it is such an awesome and incredible industry to be in, especially the people, even during the bear markets like we were talking to last night, that the people that really want to be in this industry show up, get together, talk, and want to go talk about the future, and not always all about the past. So it is good to educate people, to bring them in, but it's always good to even push through during the bear markets and enjoy the high markets. So.
Yeah, I'll add on to that. Bitmain was founded in 2013, and I feel like in crypto world, that's a really long time. But
decades ago.
Yes, but we still see ourselves as a startup company, and I feel like, personally, especially in China, because we banned crypto mining, and it is really hard for me even to explain to my friends or family, what do you do? I was like, oh, crypto mining, and they're like, oh, what's that? So you have to and most of the people in China would think it's a scam, actually. So I have to explain them over and over again. And I think you just mentioned education, and I think that's very important to raise awareness of what mining is, what crypto is, what blockchain is, and to convince them that it is actually the future trend.
So great point. So China banned Bitcoin, and this is the only industry where you can shut down half the industry, and within 6 months it resurfaces and is working again. And so I have a question to the panelists: is after China ban. The industry mostly shifted to North America. But now we have, again, sort of this movement of hash rate. We're seeing more of it migrate to LATAM, to Africa, to the Middle East, and Russia, where, and there's also always down the pipe the threat of more bans coming down. How do you guys see the mining industry changing in the next 5 years or longer?
I think it's going to be more mobile.
Okay.
I think what the China ban proved was you can move around. And I think with the mobility we're going to be able to see, people are going to be looking for where's the lowest cost energy, green energy that we can find, and then you look at the business model and make it work. Yeah. Because the biggest expense we've got, and it's no secret to anybody, is electricity. So if you can get cheap electricity, have a community that supports you, I think there's mobility in that. And we definitely saw that. People will think that you're building a large facility somewhere in the world and you're there forever. Yeah. If the government's against you and regulations aren't there, you're going to be, again, thick-skinned because you want to make it work, because you're there to educate them, because it helps the whole industry. But if push comes to shove, it proved that the hash rate can move quite quickly.
I'm personally seeing like this integration of mining within other industries, and I see that more and more. Obviously, oil and gas has been mentioned a lot of times. There's pulp and paper, there's heat recovery that you can integrate, and district heating. Different business models. So our business model takes, we get paid for the tires, so our energy costs are lower, but obviously more infrastructure costs. I think it's interesting how like we are really resilient and spreading out where we can to fill those niches. Kevin, you wanted to add something?
Yeah, I'm nodding in my head a lot because I'm thinking back when Darcy mentioned mobility of miners. If you look back historically on Bitcoin mining hash rate and its difficulty, before China banned mining, there used to always be a drop right around November, and around March, April, May, June, it would pick back up again. That's when all the miners are transferring their equipment between the north, where they would use coal power during the cold months, and the dry seasons of Sichuan, and then move it right back down when wet season would reemerge in the southern part of China. And that was just one way of miners were kind of taking advantage of moving their facilities just across one nation's borders. But nowadays, like you're mentioning, Mags, like there's other alternative uses for Bitcoin mining, right? You can use it to stabilize grids. You can have microgrids. You can do heat recapture. Like the technologies now are maturing enough that there's also alternative use cases you can leverage to get additional revenue streams.
Awesome.
Yeah, so the Chinese miners call that the lift and shift, right? We still call that at core. When we move machines between facilities, we still call it the lift and shift. So when you had I guess maybe everybody does. When we had the Chinese ban on mining, the flight to North America mostly was because the power existed in North America already. But I think over the next 5 years and really 10 years, and I thought, we've been talking about this for 2 days now, as the benefits of mining to a local grid are more readily understood throughout the world, you're going to see that benefit translate into people that need to have new grids recruiting miners. So I think we are going to see a shift globally. And I think, not that we're done in the United States and in North America, but I think we are going to see a much more diversified shift because we talked about it, the lady that showed us the video, in Africa where you have the microgrids or the hydro dams. We're going to see a lot more of that because it can pay for all that grid integration that needs to be built out. So over the next 5 or 6 years, I think we're going to see that. And miners are going to chase that inexpensive power. But again, it's going to be a very symbiotic relationship between the miner and the power grids globally.
I have a question for Ben, changing up, because I know we're focusing a lot on Bitcoin, but it's broader than Bitcoin for proof of work. What is the future of script ASIC mining?
Well, the future of script ASIC mining is something that we actually just validated literally 2 weeks ago. We were able to validate the critical architecture in our design on silicon and be able to show it mining in third-party pools. And what we're actually able to accomplish is the ASIC itself is actually going to achieve expected efficiency of 0.067 joules per megahash. What this allows us to do is to not decentralize hash rate, but to actually decentralize hardware. So we are able to provide a miner on a smaller form factor that's powerful enough to maintain profitability for B2C. And that's what we really want to focus on, is the B2C market. We kind of actually are taking a book out of Ethereum, because they went to proof of stake and they have all these GPU rigs and all these guys that, you know, got into the industry because they were living in a poor neighborhood, but they were making $5 to $10 with their GPUs. But now they can buy our hash blade that communicates over a PCIe X1 slot, and then you got 2 8-pin or 6-pin power plugs in the back of it that you can use with your PSU from your PC, and now you're mining with your PC, and you're gaming at the same time because you're not taking up too much bandwidth. And that's what we really want to instill, is create a good experience for the individuals. Instead of somebody buying a machine, they get it, and it's just an expensive paperweight. We actually have a realistic, you know, payback period. So that's kind of what we're wanting to accomplish. And of course, we want to, you know, sell to the big guys, but we only want to do that about 20% of our hardware and keep that about 80% to the B2C. So get some enthusiasm back in it.
So continuing the home mining renaissance that we saw last year, kind of, enabling it?
Yes.
Amazing.
We want to enable.
Awesome. Russell, you said the word risk. So you know, you panelists, how do you manage risk, whether that's energy pricing, whether that's hash rate growth, you know, Bitcoin price, geographic risk, diversification of revenue streams, especially for, you know, not just public miners, but I'm curious, what are your strategies?
Ethan needs to start that because he has a whole thing on derivatives later. Let him advertise that first.
Yeah, so you touched on a lot of points of risk there. First is on regulatory risk. So I think we've all been watching what's taken place in North America over the past 2 years, and certainly it seems like there is higher jurisdictional risk in certain states and provinces across North America. I think one of the most effective ways a mining company can deal with that is to diversify from a jurisdictional perspective. So whether that's across different states that have different forms of governments, or that's across different countries, I think we're starting to see that really take place now, where large-scale mining operators, they don't want single point of failure on a single decision maker at a single state level. So that's one way that I think a lot of miners are moving in terms of reducing regulatory risk. On the economic side, I'll be talking about hash rate derivatives in about an hour here, so I'll save some for that. But certainly, like we've seen the past cycles, mining economics extremely volatile. So you want to make sure you have prudent financial management when it comes to balance sheet, hedging your power on your cost side, hedging your revenue through hash rate, and making sure you survive the cycles.
I think it's just diversification everywhere. And when I started with Hive, we were doing Ethereum. So in different countries, so we were doing in Iceland, doing in Sweden. Everybody told us Ethereum's going to be gone. You're going to have the merge in, you know, tomorrow, and they were saying get out of the business. But we've been continuing to diversify because we knew it was coming. So you move into Bitcoin. So we purchased a couple of facilities in Canada. And then as that's going into HPC. Yeah. And like I say, is, you know, hedging. It's always taking a look, so it's almost when you take a step back, we've been diversifying the whole time, but I didn't even realize it. It's just what you do to try to make sure that you can try to smooth it out a little bit and take out the huge volatility, because without that diversification, like say, you're a one-trick pony, and the skin has to be like, you know, an armadillo to be able to survive that kind of stuff. So I think more and more that's going to continue. And with the diversification, we've seen so much with the regulatory, you know, whether it's in Canada, and then Canada's okay, then you hit it in Sweden. And it's just educating no matter where you are, not running away, because the education and trying to work with the regulators is going to help us worldwide. You know, this isn't something that's just one country, one jurisdiction. It's sharing of information, and that information diversity is going to help everybody in this ecosystem, whether it's, you know, Bitcoin mining, data centers, or, you know, anything of proof of work.
If we don't fight, there's going to be nowhere left to run. We got to stand our ground.
So I was just sitting here thinking about this. When JAIME LEVERTON was doing the fireside chat with John, he was talking about the airline industry and the fact that they were, you know, finally got around to hedging their gas. Well, here at mining, not just Bitcoin mining, any kind of proof of work mining, we're only just now maturing enough that that's something, but there's plenty of roadmaps for industries that have volatile inputs and volatile outputs. And we have a volatile input of power cost, we have a volatile output of the price of whatever we're mining. So we need to actually follow some of the playbooks of legacy industries that have already figured this out, and some of it's derivatives that Ethan will be talking about. And then of course there's what we just talked about here with the regulatory risk, the geographic risk. You know, at core, we haven't left the United States, but within the United States we're in 5 different states, right, which is 5 different legal environments for us, and we're under 7 different utilities. So all those things is about diversifying your risk. I do think you're going to see miners going a lot more smaller sites, because it's going to be easier to diversify your risk with smaller sites. When you drop the hundreds of millions of dollars it takes to have a big site, you have a lot of geographic risk there. Now, sometimes you can make that play and say, hey, I'm going to build my sandbox here, and I'm going to protect it, and I'm going to spend all I can to make sure that I'm protected there. Sorry, pulled that mic away. I'm protected from that regulatory environment, but another way to do that is also just diversify yourself across multiple areas, and I think Darcy said it, be mobile. So if you do have a problem, you say, okay, I'm going to pick up my assets, I'm going to move them.
I think those are all excellent strategies, and I'm also curious because you're in a very different space in the hardware space. So how do you manage risk?
Yeah, so I was gonna add on to that, and one way, well, Bitmain sells products, but I'm not trying to sell products here. So we're here. So the other way that we are like trying to reduce risk is that we want to grow with the POW ecosystem, and that's why we're here. So we try to support the POW ecosystems. Like, for example, like we have this LTC labs that we did with LTC Foundation, with Ampool, and then we have ETC Grand Style that we putting a lot of money to try to help develop the ecosystem. I think also that's the reason why we're here. We want to support the POW ecosystem because the existence of POW is why Bitmain can survive, right? So that's one way, like we're putting a lot of efforts. So here I want to say that like if you have good projects, POW project, you can find us. We will provide support and to grow with the system together.
Thank you. So I'm going to close off with one final question. I have to ask a gentleman, you know, the halving is looming. I know. Deep breath. Many of us are like, yeah, bear market's coming, but I think the miners are seeing it in a very different light. Sorry, bull market. What if the bull market doesn't come when you expect? Like, are you doing anything different? What do you think, you know, how will the halving affect mining?
You'll probably see half of us left on stage next year. I think it is important to look at how miners are subsidized. Right now, we're very focused on just the block subsidy, which will get cut in half from roughly 6 Bitcoins, about 3.125, right? So I think that drives the importance of how Bitcoin itself is used, right? What's driving fees, and is there going to be more on-chain activity? Because otherwise, we're just hoping for price to go up. And that's not a guarantee, and if it does, we just don't know when that may happen either. Then there's also the factor of there's a lot of hash rate sitting on the sidelines as well. So what's different from this upcoming halving in past ones is there was always a lack of machines available on the market. I don't think it's that big of a secret now that Bitmain's producing units at a pretty big volume, and there are also other competitors out there that are also releasing new miners with higher efficiency. So in addition to needing price to rise, you also have to get more efficient units to be competitive because the hash rate's going to be relentless the moment price does go up.
So I'll say, and I'm probably in trouble for saying this, I'm not scared of the current halving coming up, but the one in 2028, I'm petrified about. So the hash price can cut in half, and you will see some folks drop off. That's true. But you can, with proper planning, you can hedge and you can make your way through that volatility in 24. But if you look out at 2028, it's really scary. And I actually do think that Bitcoin, and I'm just talking about Bitcoin, the other coins will have this problem too, except for you just heard Charlie Lee talking about the merge mining, which actually with Doge actually has solved some of this problem. But with Bitcoin, I think there is going to be a situation where if we don't have like back in May, our friends over here at Luxor had these ordinals and all that involved. It really worked great, right? Those are the kind of fees that Bitcoin miners need to make in order to continue to investing in the security of the Bitcoin network. So that's going to have to be something that we look out, not just this halving, by the next halving. There's going to have to be a solution there if we want to continue to have the security on the Bitcoin network that we have right now.
Heading to having, everyone talks about efficiency of machines, low cost energy, but I think like the real winners out of the halving are going to be the guys with the biggest balance sheets and the ability to clean up distressed assets. So the say 25 to 40% of miners that do fall offline after the halving, many of those will be sold for distressed prices below market. So those that have the balance sheet are going to consolidate and become the big players in the next cycle.
Yeah, agree with all of that. And it's one of those things within Bitcoin that you know it's going to happen. And that's the greatest thing that we've got is, there's so much uncertainty, we can plan for this. We know it's coming. And it's continuing to try to be the lowest cost producer, taking a look at things. And when you're modeling, not that Bitcoin is going to double, because they say, oh, it's happened in the last halving, it's happened the other. It may not. And what if it doesn't? What if it goes through 2024 into 2025? You've got to have that real strong balance sheet, as Ethan has indicated, to make it through. Because it will turn, it will move up with more use of Bitcoin within the ecosystem, and you just keep plugging along and doing the best you can, and the strong will survive, and hopefully we're all here next year. It would be nice.
I'll speak on the script algo because that's what we're more aligned with. But the way we want to go about this and what we're trying to accomplish is we're going to do active hash rate monitoring for B2C miners and the B2B miners. So what this means is, this is no offense to Bitcoin mining, but the market has absolutely been flooded with hash rate where the small guy can't mine profitably anymore. So what we're actually doing, we're being very transparent. Once we go start manufacturing and start delivering our product, we'll be taking 5 to 10% of the hash rate. We would like to maintain profitability between $5 to $10 per card, because what happens is once we start delivering these units, legacy miners will be the first to fall off. And we want to, again, instill a good experience because we don't want to scare people away from crypto because they had a bad experience. And that's the way we see us moving forward to be a good contributor to Script, the Dogecoin community, the LiteCoin community, and to help increase utilization. So I think it is good for the manufacturers to take a more proactive approach to find a good solution that fits each algorithm that helps the community.
So I guess for Bitmain, we just keep producing good miners and excellent cost efficiency, and we'll continue to explore new energies such as hydrocooling and other energies, and then also to build with the POW ecosystem together. And that's what we're going to do.
Well, thank you very much. This concludes the Proof of Work panel. I felt like, and I'm sure the audience, we're drinking from the fire hose. A lot of experience here in the room. And if you have any further questions, please do catch our panelists after this talk. Thank you very much. Thank you.